Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
All right, what's going on, guys? On this episode of the Collecting Keys Real Estate Investing Podcast, we have another episode of the Mike and Dan Show, and it is the slow season. So Dan and I are sitting here going, should we even have this today? Because we are coming up hard on Christmas. In fact, this is the last episode that we are recording before Christmas. You'll be hearing this shortly after Christmas. But in the real estate world, this is typically when things are dead. Not a lot of people are
quiet.
Yeah, they're quiet. Not a lot of people are buying. Not a lot of people are selling. Although we did just get a contract signed around today with our Detroit clients. So, they're not completely dead. Our Detroit partners out there, they're part of our Instant Investor Partner Program. We've been working with them for 2 months, and we finally got our first deal signed around. So that's pretty cool.
Heck yeah. It's a win.
Big win. So it's not completely quiet, but a lot of other places it is certainly pretty quiet. Because even looking at like tenants and those sort of things, like if you're trying to rent stuff out right now, no one wants to move, especially up here. It's snowy. A lot of people, they're just using the mental time frame of, the new year to fix all of their issues.
Right. That's when everybody loses all their weight. January. It's new year, new me. Put off all the goals.
Yeah.
Hey, I'm putting off all my goals till then too. Our tenants are quiet, which is cool. Like you mentioned that, like they're not doing anything stupid or good otherwise either. But like it's all quiet out there.
Yeah, I haven't heard anything from any of my tenants in quite a while, which has actually been good. I have my two Ukrainian tenants who are having a good month because I gave them I don't know if I talked about this already. I gave them the months off rent because we went and picked up like an old washer and dryer there 2 months ago? No, it wasn't 2 months. It was last month. And accidentally left like the side gate open and their dog got out and they ended up finding their dog, terrible. But they lost their dog for like 4 days and somehow this little thing survived like out in the wilderness. And I felt so bad though, man. I was like, I need to like have some sort of reparations for that. So I waived rent for the month. I figured it was the least I could do.
You should have just brought a new Chihuahua over there.
Oh, dude, that's not the same. It's not the same, man. Like I felt so bad, especially because like we went over like in the morning we did that, and then they texted me a little bit later, and they were like, "Oh, I didn't realize when you came over that you left the gate open, and now our dog has run away." And I was like, "Fuck." I felt bad.
You hear too much. This reminds me of this Tom Segura bit where he talks about like the difference between like people that have kids and the people that like don't have kids but have dogs. Like he's like, here's the difference. He's like, if my dog ever bit my child or injured my child, I would choke it, and I would choke it out to hold its head underwater and get after it. And he's like, and then he goes through the whole joke of how he would murder this dog for biting his kid. And then he's like, yeah. This one's hit pretty hard all tour. Nobody laughed.
Yeah. So I know that bit. And what he says is he's like, I understand people love their dogs. They're like, I have a dog. I love my dog.
Yeah.
And I also love my children. And the one difference I know is that if my dog ever bit the kid, I would drown that fucking dog. And then I would give it to my son and say, I did this for you.
Yeah, exactly. That you said it was always better. I couldn't really remember how he said it, but that's exactly it. Like, it's just a dog. You're good.
Yeah. Oh man. But I mean, they're like a millennial couple. It is their child, dude.
Yeah, from a war-torn country, I get it.
Yeah, I mean, yeah, exactly, right? They don't have much, man. Their country got freaking devastated this year. That's why they're over here. They were fleeing that, and they're just looking to get out of their mom's house.
Their president, who's also spearheading the war, was getting interviewed by David Letterman. Is that who interviewed him? So I think he's okay. Yeah, in a subway. On a Netflix special, because the subway was I just saw the headline for it or whatever, and I was like, wow, he's not really spearheading the war.
I mean,
in his clean 511 tactical gear that he got sent to him from 511 for like wearing it, and he gets paid like probably $5 million a year.
what are you supposed to be
He's
like?
sponsored. He's sponsored.
Is he supposed to be like on the front lines as the fucking medieval ages?
That's what that's what he's trying to portray. Like he's out there, but he's wearing like his tactical gear. He's all out there, like, yeah, I'm on the front lines with my people. I'm like, no, you're not.
I mean, he's closer than most world leaders would be in at that point,
You're
man.
He's still
in the country.
He's on the ground. I'll give him that. We would not have our president be on the ground, but I mean, come on.
Have you seen like the recent video stuff over there? Like the front line of it, it's like straight out of World War One, like the trenches and shit.
I don't believe it.
Dude, go look at the videos. Like, it's insane. It's like
there's no. They're not having a trench warfare.
Yes, they are.
They probably bombed the shit out of their buildings. I bet.
No, dude, go look at the freaking trenches. You see them everywhere, like right on the front line. Like, honestly, have you seen that movie 1917? Either like that one that came out a couple years ago, the World War One movie. Either
zero fucking sense. Makes zero fucking sense. Why
Dude,
would you have a trench when you have airplanes?
Go look at the videos. You'll see it.
Okay, all right.
It's crazy. Yeah. Honestly, though, it's.
There may be some trenches. You're right. I don't know for sure because I haven't been to Ukraine, but that seems like the dumbest way to fight a war in modern times. When you have tanks and things that could just drive up to the trench and like look over and be like, "Hey guys," and drop a grenade.
I don't know how it's working. I mean, that they're not the U.S. military going against the Middle East, which is like basically aliens attacking prehistoric era. Like honestly,
it is.
So, oh man, you enjoyed that joke way too much, you fucking sicko.
I did.
Just having flashbacks with the good kind.
Yeah, having a good time here with you and your trench warfare and us being aliens fighting prehistoric Stone Age people from the Flintstones.
Oh my god! All right, we're gonna definitely get canceled for that one.
Sorry, my bad.
Anyway, so yeah, but so that was my one tangent drama I've had recently. Besides that, it's been quiet. And then just looking at investing strategies going into the new year. I'm looking at just selling off a couple places and 1031ing into some slightly different assets, but nothing too exciting at all, though, man. I mean, from pretty straightforward. I guess one thing though that this is a good sort of lesson for everybody, especially when you have all these freaking gurus out there that are spouting off about just going and getting like all these lines of credit.
Oh yeah.
And just using those to buy houses with then it's not with your own money, it's all with the bank's money. We just had a $100,000 line of credit canceled. We
got canceled. Yes. Yeah, Mike and Dan got canceled. We did.
But
if anybody's not going to get canceled, it's us. But we got canceled. Mm-hmm.
But yeah, for no real reason other than the fact that the bank told us that they were looking to reduce their risk going into the economy next year. So with how business lines of credit typically work, they'll review them on an annual basis, just sort of like want more information about how your business is doing, make sure you're still lendable, all that sort of stuff, all of which we fit. They didn't even give us the opportunity to reapply. We had used this line of credit pretty heavily over the course of the year, had on-time payments, everything was like going good. And then I went to go make another draw, and they're basically just like, yeah, you can't do that. Sorry. We actually want you to pay this due by the end of the month. This was yesterday. They said they want it paid in full by December 31st and that they were not going to be renewing it for the new year purely for their own risk and the risk mitigation. And I'm curious what they would have said if we had the full $100,000 drawn. Like if they would have just been like, and it got to the 31st, if they were just going to be like, yeah, so you need to pay that back in 30 days, which they very well honestly could have done that. Like it was fully in the right to do so.
I didn't read the fine print, so I can't speak to that.
No one does.
Nobody does. Yeah. But that is an interesting point because when you do get these, especially these unsecured line of credits, they do an annual review on these, and at points in time where they're not trying to hedge risk due to recession, you could actually go back and ask for more. Mm-hmm. So say you did what we did. We maxed out that line of credit and used it throughout the year up and down, and then we paid it all off, and it was sitting zero waiting for us to pull on it, which we were about to pull on it again. Mm-hmm. And we were in great standing. And so in any other year, we could have been like, hey, do you guys offer $150 or $200 unsecured line of credit for businesses? Here's our track record. And they see that, and they would likely be okay with giving you an increase in that had you had good standing and your business is still strong. Not right now. And that's the question that we should ask and get answered is if we have a line of credit pulled and it's probably going to depend on the institution. If we had, say we didn't pay it off in the beginning of December like we did, had we had it pulled already, would they be able to call it because our year is up, or would they have to do something else with it? Because they probably wouldn't amortize it or anything like that because there's nothing securing it, so they probably don't want to do that.
Yeah. Yeah, I mean, it is a good question. And so I asked, well, I guess I posted in the GoBundance Facebook group that we'd had our line credit canceled because there was a lot of people that were using that institution because it was very easy to get lines from them over the past couple of years.
Easy come, easy go.
And one of the main things that people said was people that were local to the area of this credit union, or I guess actually it's a bank. Was it a bank? Whatever it was. It was either way, it's a small like local area that was based out of North Carolina, one of the Carolinas, one of those East Coast states. Everything we're in Washington State, man. Everything past the Mississippi is like one giant state. But
except for Florida, Florida gets its own.
Yeah,
area,
and New York and like Michigan, the ones that are shaped it funny. The people that were close to there said that they talked to their reps and they weren't having any sort of. They were told that that's not going to happen. But the people that basically were outside of the geographic area were starting to get called. And there was actually one person, though, that was based out of Colorado that has stuff. Then he responded and said that he was told that his weren't going to get called. But he also used them for banking and had like a decent amount of cash deposits and stuff like that in there. So I think that was something that, would likely play in your favor is if, you have a significant deposit, they can see money coming in and out of that account. They're going to feel a lot more comfortable keeping a line of credit open with you.
For sure.
Versus if all you have with them is a line of credit and the free checking account that they forced you to open when you got the line of credit that you just kept at zero for the entire year.
Yes,
which is what really happens with most of these lines that people get.
Yep. Yep, absolutely. Yeah, had it been secured like a home equity line of credit or a line of credit against a property, I think things look different. I don't know that they're calling those or looking to do that. I don't think we're in that kind of situation because with those, the bank at least has some recourse against you if you have it out, and they can choose to amortize it and basically make it like a long-term debt where they're getting a principal and interest payment. And you can choose to do that, right, if you want to on most of your line of credits that are held against a property. But again, they have some asset securing it, so they're not scared. On these business lines of credit, going into recession, a lot of businesses close shop, and that's just what happens. So if they have money out there that's unsecured by nothing, or secured basically by you and me, they don't want that. They have no recourse to get it back.
Yeah.
But we do have a plan to just go get a bunch more of these because they're pretty cool and see if we can get, I don't know, how many do you think we should get? 10 more?
I don't know. If you go watch any of the Instagram gurus, they're just like, go start a new business and then call 50 of them in the first month.
No, they don't even say start a business. They say go get an LLC because that means you have a business. And then go call all these people.
Yeah.
I don't know. They are a great way for your business to operate, especially in real estate because it's so asset intensive and sometimes you do need to bridge the gap between closings or for construction funds. But as you and I have talked, we've had a pretty big swing in money recently. Not that we're losing money, but when we added up how much money we were planning to have in our pockets to the swing to what we don't have in our pockets is huge. And so if you are just solely relying on credit to do your business or solely relying on other people's money, you're fucked.
Yeah, totally.
That's all I'm going to say. That's a terrible business model anyways.
Yeah, it totally is. And so that's kind of the farce with all these people that say, you can do these business with none of your own money, just raise private money, just use other people's money. I mean, technically you can, but then if you get into these, it does. Then if you get in these weird situations, though, you're kind of stealing from other people and you're putting other people in a weird spot. And you got to decide if that's wants to be you, which us, I know for us, that isn't who we want to be. We don't want to be the people that are fucking people's retirements and those sort of things.
No, and I do believe in other people's money or borrowing money from a bank. I mean, we've done all of that, but take it easy. Just because it worked once doesn't mean you need to go and do it 100 times.
Yeah.
To ease into it, build some robustness to your business, build some resiliency so that when things do kind of push back at you, you have some cushion. That's all I'm saying.
Yeah, exactly. And I guess let's just put some numbers on this. People have context for how quick things can swing. So if we look at, I guess this year, so we have the one property that we've been unable to sell that we're still trying to figure out. We're now refinancing it to list again in the springtime. It's a little bit better buying season. And this was just tough price point to be selling a property, fully renovated. It's a little bit of a unique property. It's just, a year ago it would have sold in 5 seconds. Now just with the market conditions,
and it will sell. We just don't want to sell for what people want to pay us.
Yeah, right now. And we were, by the time I was listing, it was snowing. It won't fucking stop snowing.
Yeah.
Bad. So in that property, we have like 150 grand tied up. They were expecting to have back at least, if not more than that. Maybe even,
it might be more.
maybe 200,000 tied up that we're expecting to have in our pocket that we don't. We had the oil spill house that you guys have heard about if you've been listening to us last little bit, which ate another 50 that we weren't expecting to have. We have the condo house that we weren't able to sell.
Say that again. What did you say? 850.
Another 50 we've tied up in the oil house.
Yeah, but we also have 160,000 tied up in that one too.
Oh, you're right.
Sold yet.
Yeah, so we had the piece of land that we were expecting to get back was 160,000.
That's attached to that property.
Yeah, that's attached to the property that we were unable to sell, and this is again indicative of the economy. They decided to not let us rebalance the loan, do a partial reconveyance of the loan because they wanted us to not have the low interest rate and refinance the loan. So that's across those two between the oil repairs. And that's 200,000. So that's 400. Then we have the condo that we couldn't sell because of the insurance situation, which has 130,000. So that's right, 500 into roughly. It. We got our line of credit just called that we were expecting to have that was 100,000. So does that put us at like 600?
Yeah.
And then we had two of our private money lenders. One just called a $250,000 investment they had with us. They wanted that back. Another one had 180,000. So that's like 400. All of a sudden we have $1 million swing on money that we were expecting to have available to us that now we just don't. Over the course of like 7 months. It's $1 million.
That's a lot. It's just a cool milli.
Yeah. Well, I mean, like, I think the one testament that we do have that shows our maturity from this year, honestly, even over this time last year, like when we started the podcast, was this time last year, we would have been toast if that had happened. We would be so screwed. But just because things have gone well, we've leveraged appropriately. We've had, we've been putting money in our pockets and not over leveraging on a lot of stuff. It's a inconvenience and it sucks. It definitely is going to, slow down some of the stuff that we're working on, but it's not like going to make us go bankrupt, which is good.
Yeah, I mean, and you and I have always preached this to people, and including to ourselves, because sometimes it's hard to practice what you preach, but don't over leverage yourself. Don't get out there and start doing things that are just dumb, because you watch and see people, and it's great when people are high-fiving each other and they're being successful. But it does not take long to watch them unwind when you, in your heart, like that's possible and it can happen, and you're not doing it for that reason. And it doesn't feel good until you start seeing other people unwind. Not that you're like laughing at other people's misery, but you're like, okay, yeah, we stood fast. We kind of held strong on some of our principles, our core values around investing, which is not easy. And now we're sitting there in a decently comfortable position.
Yeah. And
still sucks.
I mean, I would say for us, this is the first sort of downturn that we've gone through or started to go through, right? And you can now see like a lot of the OGs that have been around for a while, they're like, oh yeah, everyone's making money right now. Just wait until stuff turns and then you'll see, like the weak hands will get shaken, right? And I mean, we were definitely a part of that crew for the last couple of years where we would look at some of the people, like how they were making money, some of the deals they were doing. And, we were making money too. We look at someone and be like, man, that deal they got was fucking sick. Like they are raking it in. And a lot of those people are gone. They're not here. And like, not only that, but some of them are filing bankruptcy and all this sort of stuff because they just kept
made career pivots.
They made career pivots. Yeah. Yeah. So, but point being, that's why it's like I said, have those investment principles, have those cash principles, and, run your numbers and stick to them, and don't get greedy just because, you feel like you're the king of the world, because you're probably not.
Yeah. No, it's okay to push a little bit sometimes, but again, don't make your entire business model where every deal you do is pushing.
Yeah. Yeah. I mean,
that's just the bottom line. Like if your whole thing is like, oh, I buy short-term rentals, and I'm going to go down this. I know. Sorry to our listeners. Mike and I always, this is like it's an easy button for us. Sorry. But if your model is to buy like short-term rentals in like non-desirable markets, and like that's all you're ever going to own, and the only way that they cash flow is if they're short-term rentals because you're paying retail for them and you can't figure out how to do it any other way, like that's dumb.
Yeah,
I don't know what else to say.
Yeah.
Like that's called pushing it. But if you're like, hey, let's try out the short-term rental in this non-desirable market that we think we can cash flow a little bit, and if not, there's still some intrinsic value to this property and we won't be net negative on it. And worst case scenario, if we are, we can absorb it into our portfolio. This is a test run. Let's try it out. That's not pushing it. That's like trying to test your business model. That's trying to like, expand a little bit. But like I said, if that's your only business model, if only things only work when you're just doing weird shit, like,
well,
good luck.
I think it's the importance of always having more than one exit strategy. Because like short-term rentals, we hit on those a lot, even though that's what I'm looking at 1031
Sorry,
into.
it's just fun.
Yeah, I'm looking at 1031 my couple of properties into a short-term rental in Austin. But it's also in Austin. I feel like it's a high desire area. But you're starting to see that too. People that have multifamily properties, people that have triple net properties, especially we've talked to some people recently who were buying properties for the last couple of years where they're like, oh yeah, we're just going to, stabilize it, reposition it, refinance it out or sell. And so like they were getting like these 3-1 adjustable rates or these 5-1 adjustable rates. And then all of a sudden interest rates go up, cap rates start to go back up. Your exit looks a lot shittier than it did when you bought that property, and you have no other exit strategy besides, something that involves debt, which is now significantly more expensive.
Yep.
So,
and that's the bummer about real estate that we always tend to forget is that it can be illiquid and it can actually be like a super big drag.
Yeah.
Like if you like go put some money into a stock, like, and you start losing money, like you're going to lose money on that stock, but that stock's not going to get like a leaky toilet as well.
Yeah.
Like it can still go to zero. It's not like fun, but like it doesn't take any effort from you while it goes to zero. Or like real estate, you can make a bad choice. And although if as long as you can wait it out, you're good. But if you can't wait it out, that could be a costly decision for you.
Yeah, I mean, absolutely. And then you're using leverage as well, which comes with additional costs. And something like, I guess normally with stocks, people don't use leverage, even though I guess you technically can. Most people aren't using margin and those sort of things. Did your dog just come into your room? No, but
no, my wife came in my room because her battery's dead. Remember I told you before the call? I was like, oh, her battery's dead.
That's when I just saw your door open, then nobody came in, and I thought your dog just came and opened your door. But I
need a recording light out there.
Yeah, right. There you go. Anyways, if you want to see a ghost come in the dance room, go check us out on YouTube. But yeah, so you don't usually use leverage if you're doing stocks, but I've actually seen an influx of stuff recently on Reddit, on like the different stock subreddits of these people that were like using margin on Robinhood. Still, this got people last year when they were using margin and when they doing like the AMC and GameStop stuff.
Yeah.
But there's people that had like $100,000 basis in their accounts, right? And they had been using margin, and now Robinhood is like, okay, you need to, we're calling your margin. You now have to give us like $4 million to cover that because they're such in debt.
Robinhood let them go there that far.
And that's the controversy. As they're like, why the hell would they let them do that? Because they were like doing all these day trades, and I don't understand entirely how it works. But people are having these screenshots and sending these emails that they're posting on these different subreddits. They're like, yeah, I just got told I have to bring $4.4 million to pay off my Robinhood debt. It's like, well, good thing that you didn't read the disclosure that you signed off on.
I feel like I don't know. Again, I'm not a pro at stock investing. I have some stocks, but that's about it. If you're like day trading on Robinhood, you're probably not. You're probably like over your head.
Totally.
I'm just saying. Like if you don't have, what do they call it, a Bloomberg terminal? Like if you don't have access to that, you probably shouldn't even be day trading, let alone day trading at all, no matter what.
Yeah, no way. But anyway, but yeah, aside from that, we're just working towards getting things launched into this new year. So we're doing a lot of SOPs. I was actually thinking, have you seen this like Chat GI stuff, or whatever it's called? What's it, like the AI?
Chat AI?
Yeah.
Chat AI?
No, it's GI, I think. But people have been using it for like the photos and shit that you're seeing all over Instagram right now. You can actually use that to write stuff. So I haven't.
I heard you can use it to write like you could like write blog posts with it potentially.
Yeah, so I haven't heard about this yet. So I want to go. I'm going to try this. I'll report back in this episode. I want to go and have it write like a standard operating procedure for like something simple and see if it comes out good.
So how would that work? Like, what do you have to do to get it to write?
I have no idea, but I've seen people doing blog posts. But if I can be like, write a standard operating procedure for
I don't think you'll be able to do that. I bet you it wants you to give it like some like buzzwords and then like have it go out and it'll search the internet and bring all those buzzwords together in what's the most common way people are talking about like flowers in the summertime on a trail while hiking.
No. So let's think about if you did it for something though that was like super generic. So let's say we have it try to write a standard operating procedure for like
opening a can of beer.
No, like a bookkeeping, like doing bookkeeping for a rental portfolio.
Maybe.
I feel like that'll get us pretty close. But
if all of a sudden we start selling SOPs for like 99 cents,
yeah, right,
you'll know Mike figured it out.
Well, that is kind of the thing that people are saying though is as the stuff gets more and more sophisticated, a lot of creative jobs or jobs that are even slightly technical in nature but are repetitive, such as code and development, things like that, are all going to go away because you can use those to write code right now. If you just say like, oh, I need this button that does this function that is green, like you can have it and it'll actually write the base code in different languages for you.
You still need somebody to tell it what to do though.
Yeah, but it takes away like the technical aspect of it.
Yep. I know that, especially computer programming. Yeah. That seems to be something that's so you could easily automate it because a lot of it is cut and paste anyways today. And if you learn how to do one function in one type of code, like you may want to do that same function in another type of code.
Exactly. Yeah, I mean, totally. And they've already taken so many things towards making that simpler by having like WordPress and like Squarespace and all these sort of different
like libraries, right?
Yeah, well,
like, aren't they like code libraries? Like you could go online. I've never coded before, but
no, you don't have to code shit on any of those. You can at least like.
But I mean, like you can go to a hypothetical code library where like you can like go to some website. I'm talking out way over my skis, but you could go listen to this. You could go to like a JavaScript website and be like, "Hey, I want a." I don't fucking know, dude. You could say, "Hey, I want to go and I want to put a button on my website. I need this JavaScript to do it."
Jesus Christ.
And there's a code library for JavaScript button on website, right? I get it. It's not right, but I just say that.
Yeah. So there's frameworks and there's libraries. So basically,
boom, done. You said it. I'm done.
So like
I was right.
So if there's one developer listening, yes, there's frameworks and there's libraries. What I'm talking about, and basically the framework will be kind of like the foundation of what you use. So it's like a JavaScript framework, which will have like build the back end of the whole application, and then there's libraries within those frameworks that you can use to do like components of it.
So I was right.
Like the most basic.
I was right.
Yeah, you were not right.
Exactly. I was right. And so, point being that it would be easy to automate a lot of the programmers that are working at 3 tech companies' jobs.
Yeah. I mean, honestly, I think that what they do is a little bit more technical, but I do think that ChatGI and those sort of things, the different AI platforms are going to start to weed those people out.
So then how can we use it for real estate? Let's bring it back full circle. Besides our blog post, like how can we, what is the next evolution of that? Is that like your underwriting?
So,
like, could you
so that's part of it.
Underwriting? Because that would be sick.
People are using it to write scripts, right? So which like with web crawlers and things like that. So what you could theoretically do, depending on the power of it, is use it to write like a web crawler that you can say like, oh, I want to find all cash buying companies in this market, and it can go and like pull whatever that could potentially look like. I don't know if you tell like where to look and that sort of stuff, how sophisticated it is, but anything that's data heavy, like for a while, a couple years ago, we used to run a bot that would go and it would go through like a spreadsheet of LLCs and go through open corporates and like search for them and then skip trace the owner, and we would do that, and basically it would like just churn through the process manually. Is like the same as having a VA do it, but it was like a software that would do it, but we stopped using it because you had to have a computer always going that was operating, and it would take for frickin' ever. And then you would get banned if it would like go too fast. So like the developer that we used would have to put like weird little inconsistencies in it, so it seemed like a human. Like it would do like missed clicks, and it would have like slightly different hesitations. But then we would still get like our IP address banned from these different websites. So, so I don't know if it could potentially do things like that. That would be a little bit better because it's a sort of a back end system. But anyway, I don't know. Interesting stuff though that will be coming out with that. But I do want to try and see if we can use our SOPs, because tell you what, even though it's so necessary, especially for a lot of the stuff that we have coming up, I hate it, man. It's so freaking boring.
Yeah, it's tough. It's tough. Well, I think you got to take it off, like bite it off, like a little bit at a time. Like if you say today I'm just writing SOPs, like no, that's not gonna work.
Yeah. Well, I kind of like.
I don't know. For me, like I like to be like, if I'm doing this, I'm going to write the SOP while I'm doing it.
Yeah. Well, I do like what you said in the in our instant investor group, in our investor Slack group. Someone did ask about SOPs and how we put those together. Which I responded, we don't. We kind of just figured out. But you said, which I think is super good, is where you record like a video, whatever the process is, talking through it, and then you let your VA actually turn it into a document, and then you can always have the video and the document that outlines the whole process, and that definitely is less labor intensive than just having to like manually write something out.
Well, and here's the tough thing with SOPs is they, especially in a small business, they can change so fast. Like it can be as simple as like, hey, we don't use that software anymore. We use this one. Now your whole SOP is gone.
Yeah, the whole thing
for that, right?
Yeah.
And so that's why I'm always in favor of recording a video of you doing it, because that literally, most of the tasks you do are like 5 minutes. Like if you're trying to write an SOP around a single task, now there could be a large overarching task with like several subtasks, but each of the subtasks is like 5 minutes. I think my longest is like 10 minutes of recording, and that's just because I'm talking a lot.
Yeah.
I'm so much more in favor of that because you can record it and people naturally learn better on video. Like most people don't read the manual. I don't ever read the manual. I just like figure it out. And if I need to watch YouTube, I watch YouTube. That's how I do it.
Yeah.
And so same thing. I feel like the same thing with videos and business. Do that. And then if your process changes, all you have to do is learn how to do it yourself and redo that task.
Mm-hmm. Yeah.
Redo that video.
Yeah.
Honestly.
I mean,
5 minutes.
Yeah, exactly. That's a lot simpler at the end of the day.
It's a lot less daunting to do this.
Yeah.
And as we're finding out, it's highly important.
It is.
And you may not know because you may not like yet have your business built out there, or maybe you're just starting and everything, there's just a ton of stuff and you're just like, I can't imagine doing SOPs for people because I'm just trying to learn the business. That's okay. You'll get there eventually to where you can step away for a minute and see that there's better ways to do things, more efficient ways to do things.
Yeah, totally. And I guess one thing too is I'll say don't be someone that comes from the opposite where you think you need to have all of these standard operating procedures, these SOPs, like, all these other structures in place to start making money, because you really don't. I mean, we've made multiple 7 figures and done a shit ton of deals without having any of those things.
Right.
And,
yeah. You and I were talking about this earlier, masterminding with other business owners, and they're like, oh, I have this like super elaborate system. And you're like, oh, I feel inadequate. And then you tell them your revenue versus theirs. And like, oh shit. Okay. Yeah. You're doing that without a system like my robust system that I spent all this time building before I even made one sale. You and I have always been like, let's make money first.
Yeah. And I think that's personality wise, that's type A, type B. That's what's dropping shit over here. That's, different sort of like levels of age and experience too. I found that younger people, I think just because, I fall into like, I'll call it the younger category, just being impatient. Like we don't want to take the time to build a framework. We just jump in. Like we have several interviews coming out over the next couple of months with like younger wholesalers and investors that are super similar to us. Well, super similar to me in the way that they're just like, I don't know. I was selling beepers or cell phones or whatever the fuck. And now I'm making shit tons of money and I don't know how it happened. Yeah. But then they have people that are a little bit older, like mid 30s, into the early 40s that are slightly more experienced with business and, different kinds of jobs. Yeah. And they definitely approach it from like a more structured standpoint, and there's no way that's necessarily wrong as long as you don't lean so far one way or the other that it inhibits you being able to grow and
Totally. Yeah, if you have experience in working within structures, you're going to use those. When you don't have the experience to work with structures, you're not going to use them because you don't know. Yeah. And the worst thing that you and I have talked about several times is like the people that get in that analysis paralysis where they need to write all their systems, make all this super cool business that doesn't actually generate anything because you've been spending the whole time talking and theorizing how the business will work.
Yeah, exactly. So
imperfect action. Yeah. Take it.
Yeah. Anyway. So, all right. Well, I guess one last thing. I know that you hate soccer, and by the time this comes out, this will be old news. But man, that World Cup final, bro, was probably one of like the best sporting events that.
Dude, I could not believe that team won.
That team, it was such a good game, dude. Like if anyone who has any interest in sports or competition at all had to have enjoyed that game. It was insane.
This is America. We watch the other football.
The other football. I don't know why, man. 4 hours.
It's
a bunch, everyone's like fat and just like all
because you get hot wings, man. You get hot wings with the other football.
Yeah, it's just not my jam. But Yeah. Anyway, Argentina winning, Messi completing his thing is probably the most winningest athletes ever existed. You know, it was good stuff.
Besides Michael Jordan.
Besides Michael, I think he definitely won a lot more shit than Michael Jordan.
Michael Jordan's cooler.
Yeah.
Sorry.
It's definitely richer with his like multi-billion-dollar business empire.
You see those Jordan shoes? I don't have Messi shoes back there, bud. Those are Jordan shoes.
How many more people? I wonder what would be more valuable, the like Jordan like final game that he played, or like whatever his most famous game is, or the shoes that Messi wore in this past World Cup final.
That's actually tough because Jordan does transcend many cultures, but Messi, but soccer in general has a bigger fan base than basketball.
Yeah. Poorer fan base though, so maybe they don't value the shoes as high.
Exactly. Yeah. Nobody in Africa is buying his shoes.
Yeah. Anyway, it's my random tangent for the week though. Cool. All right, Dan, anything else to add on before we hop into the...
No, that's good. I got to go figure out how to get my wife's car started.
Whatever you do, don't electrocute yourself.
Dude, this wintertime sucks, man. It kills everything, including batteries.
Do you feel like I don't know, an outcast being outside of your 5,000 square foot house trying to replace a car battery yourself?
I'm not going to replace the battery myself. I'll tell you that right now. But I do know how.
Do you like rub some dirt on your face so you look like more working class? So everyone's like, "Oh, he worked so hard. Look at that guy. God. He must have inherited that house. He can't afford it."
Gee. Look at that guy working on his wife's car.
Yeah. Everyone else in your neighborhood goes and hires someone, or just goes and buys a new car.
They do.
Anyway,
whatever.
Must be nice. It's all right. I appreciate your resourcefulness.
Thank you. I appreciate that. Thank you.
Yeah, hopefully our HOA doesn't turn you in. But
I'm gonna have a broke down car parked in front of my house.
Hey, I guarantee you can't do that. Just go put it on blocks.
No, you can't.
Really blend right
You're
in.
absolutely right.
Yeah.
Oh my god. Okay, perfect.
So, anyways, all right. Well, have fun with that. Thanks for listening, everybody, to this week's Pointless Rambles. I guess moral of the story: if you have lines of credits or any sort of unsecured debts, check in with your bank and make sure that they're not going to get called before you throw them into a project.
Sure.
Honestly, because that would be a rude awakening.
Don't bank on having them.
Yep. Spend the next couple weeks getting your operating procedures figured out, and going into the new year, use Chat AI or whatever the fuck GI to start building it out. I'll let you know if it works though. I'm gonna check it out for next week.
Yeah, check it out, man.
And besides that, enjoy your week and your Christmas, everybody. Or I guess Christmas, you probably already enjoyed it. Enjoy your New Year, because this is after Christmas.
Enjoy all the gifts you got for Christmas.
Exactly. So, all right, guys, if you want to start learning how to generate off-market leads with our 5-step process, you can go to collectingkeyspodcast.com/free and get our free 5-step guide. And that will get you started right away. It's a great time to grab that going into the new year, so you can start finding some legitimate opportunities as the new year turns over. So collectingkeyspodcast.com/free. Aside from that, please share this podcast with anyone who enjoys business, real estate, investing, or just listening to two idiots talk about nothing and Dan make jokes about being Star Wars destroying sand people in the Middle East or whatever he was doing before.
Dude, I did not make that joke. I just laughed at it, which I guess I'm culpable.
You are. So anyways, thanks for listening, everybody. Talk to y'all next week.
See ya.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.